And welcome. This is Mary Ellen McGonagle with Erin Swenlin with Chartwise Women. Happy New Year to everyone out there and welcome. We have lots to cover as this new year is unfolding in a rather dramatic and exciting way. Erin, how are you? How was your break? Did you
I
enjoy?
very much enjoyed my break. It's having 2 3-day weekends in a row is always nice since the market seems to always be open. So yeah, I definitely enjoyed my time. I missed you, of course, and our
Yes.
Women's show, but other than that, it was quite nice. How about you?
Yeah, likewise. We actually were able to have family, immediate family, come visit after getting tested. So we had a lovely gathering and really just quite nice. Yeah.
Excellent. Excellent. Now
Yeah.
it's time to get started into this new year and what the heck the market has in store for
Oh my
us.
goodness. Yes. Never a dull moment with the markets. And I know those of you that subscribe to our work have been kept up to date. But for everyone else, we're here to do just that and share with you what we're seeing right now. What we are going to be talking about today is this concept of playing the blue wave. And certainly as this was unfolding, the election over the last 2 weeks, I had been warning subscribers to my MEM Edge report that the possibility of a Democratic sweep was looking pretty close to coming to pass. And in fact, that is exactly what happened. We're seeing a pretty fast shift in the market. So today we're going to be sharing with you ways that you can play this, what we're calling the blue wave, as the Democrats come into power, if you will. There's a lot of anticipation as far as renewed stimulus that's going to be taking place, and that in turn, of course, will spur growth throughout the market. So let's not waste a minute. How about we get started with our wisdom of the week? And Erin, I can go ahead and
you go ahead and start with the first bullet.
You bet. Okay, so the first item there is what I had was talking about. It's called shifting with the markets. And really, again, we have seen this very dramatic shift as far as a rotation and being on top of that and aware of it, certainly, and then also uncovering ways to take advantage of the renewed strength in these recovery plays will, of course, greatly improve the performance of your portfolio.
Absolutely. And mine is that, market makers pay attention to what government policy is, be it the Fed's rates to, what the areas are going to be, as we're getting ready to talk about, that will be successful based on the overall political environment, global environment, all of that. Now, most people know me, and I'm not one to follow fundamentals so closely. I'm almost a technical analysis purist. But, in order to understand the market in general, you do have to be aware of what government policy is, because that will certainly affect your portfolio. And it'll also give you those insights into what might be a good place to be putting your money.
Absolutely. Yeah. And in fact, what I'm going to do, and I can begin with this, but what I thought I could do is spend a few minutes and share with you some of the big spikes that we saw following Trump's election in 2016. And I think you'll find some very dramatic similarities. But before we get into that, I think we have another area that we were going to go ahead and take a look at. I don't want to veer too much from our schedule here. I think maybe I can intersperse that as we progress along. So this first area that we're going to be sharing with you as far as where the renewed strength is coming from and what we are seeing in the way of sectors that currently now have this renewed potential upside, because with the Democratic sweep, we are anticipating a $700 billion stimulus package, and that a lot of it is going to be infrastructure related. So we're going to share some of the areas there. But let's go ahead and take a look at this first area that as it relates to these sectors that are on the move right now in anticipation.
Absolutely. What sectors are you looking at?
Well, I think first of all, we were going to take a look at industrials, I believe, and that is going to have everything to do with this move into this infrastructure play, this concept that there will be a lot of funding put forward toward the infrastructure type stocks. So let's go ahead and take a look at the industrial sector. This is XLI. And as you can see, in response to the election results, we are getting a nice pop. This pop here earlier in the industrial sector was the vaccine announcement and the approval. And we did see industrials rally a bit, but for over a month, they've been in a go nowhere environment. We're seeing a little bit of a pickup. There certainly are other areas that are moving more, but we can certainly start here. I'm going to share with you a monthly chart of the industrial sector. Take us back to the election in 2016 following the Trump, and industrials for that month of November were up 9%. So quite a bit higher. The S&P 500 was up about 2.5%. So similar move with this move into cyclical. It's a recovery play. So we can see that during that period, industrials did go on to advance quite a bit. So from here, what we can do is go ahead, Erin, I'll just give a start here. And if you would like to, if you have areas also that you would like to drill down into, but what we can do is go into the industrial sector. And then from here, I like to sort it by this StockCharts technical rating. A lot of the moves that we are seeing within industrials already began. We can see this 96 scooter rating is very, very high. And indeed, we can look at the chart and see that these heavy US heavy construction stocks had been in an uptrend already, but certainly following that election, a big pop there, because again, that is going to be infrastructure related. From there, we can go ahead and drill down, take a look at some of these underlying stocks. Again, sorting it by scooter. I'm just going to review a couple of the names here, Erin. This first one is Quanta PWR. And this particular company is all about infrastructure, both road, electric power, gas and oil pipelines. So we can see PWR in line with other industrials was in a bit of a go nowhere environment, but subsequent to the election sweep, the stock is now breaking out of a base on very heavy volume. I like the fact that this momentum indicator, your MACD, black line up through the red. So that's telling you that this period of consolidation is reversing. We're currently entering into a newfound uptrend in conjunction with the base breakout on big volume. So in addition to the pipeline construction, we are seeing a movement in oil as well. So that could benefit there. And then one other name that is clearly more infrastructure and road related is ROAD. This is Construction Partners, a smaller cap name, but again, in a bit of a go nowhere environment. Nice pop after the election. And again, we have that nice momentum shift here, black line up through the red. RSI is positive, base breakout on very big volume. It's a bit extended here, but what I like to do on these faster moving stocks is put a shorter term, simple moving average in there. This blue line is a 5-day simple moving average when these stocks really start to take off. And I would use a pullback to that level as a guide for a potential entry point. Erin, on the industrial side,
Yes. I have just a few. I was looking in the heavy construction fixtures area, and these are the stocks that are in that building materials area that I thought were really interesting. And one of the things you're going to notice, concrete was one that I found had, you can see right there, just looking at that line chart, just going crazy. The other one would be in steel. I know that was another place. And of course, these are materials, but these companies are the ones that are going to be providing this for the infrastructure, right? So
Mhm.
here you can see concrete just, wow, just hit the books here, going crazy. Of course, with runners, you know, I hate to throw runners out there because it's hard to get into those. So this one looked pretty interesting to me, Builder's First Source, because it did do very well, and it has since pulled back, and now it is starting to make its move back up to the upside. So I do like this one. You can also see that the momentum was falling, but now it has shifted and we're getting a bottom above that signal line, and that's considered especially bullish. So I'm liking the way this one is starting to shape up.
Very good. Yeah, it does look very compelling and interesting. And so what we can do from here is perhaps take a quick break, because we do have other sectors that we want to get to, and we're going to just be back in a minute. And we are back. We are going to go ahead and start this next section here with a sector that really has been on the move quite a bit, but there is anticipation that it will continue to move. You can see all the coins here. We're going to be talking about financial stocks. So what I'm going to do is go ahead and share with you a view of that financial sector, because there is relevance here, again, as it relates back to the election in 2016. But first, we can take a quick peek here, see the big pop on financials, and that's all about bank stocks. I'm going to go ahead back and take a look at a monthly. We can take a look here at the again, the election 2016, that fall period, and financials were up 14% in response. And this is another area when bank stocks are on the up in an uptrend and on the move, that's very indicative of an economy in a recovery phase. And we can see financials did go on to advance quite a bit into 2017, into the beginning of 2018. So what I want to do from here is share with you not only some individual stocks, but some of the reasons as to why these bank stocks are on the move. Number one is anticipation of now a potential $2,000 stimulus check and further stimulus funding. And this is very positive for banks, because the fear, certainly during the pandemic and originally emerging out of the pandemic, was that there would be a lot in the way of bank loan defaults. And that, with new stimulus, is going to be receding quite a bit. This is a view of the Dow Jones US Bank Index. We can see this big gap up here. And then also we are seeing higher yields. Interest rates are increasing. This is constructive for bank stocks. As they lend at higher rates, their profit margins will improve. So let's go ahead. I'll share with you how you can uncover some of the better stocks within banks. And this is an area that I've been bullish on for a while. With my MEM Edge report, I was, in fact, SIVB is one of the bigger winners on my MEM Edge report. We were able to get into the stock back here in early November, actually late October was when we got into SIVB. It's been a very big winner. And from my work, when you are studying rotation, you're looking at moves into newer groups, those stocks that are first out of the gate will go on to be your leadership names. And that, in fact, was and is the case with SVB. Fifth Third is another bank that we were able to get into early, if you will, when the stock first emerged up above these areas of resistance. And the stock now currently is in a confirmed uptrend. We're seeing this very big gap up move here. And as noted earlier in when we shared that monthly view, a lot of these bank stocks do indeed have a lot more in the way of upside. We can take a look at a weekly chart and you'll see that it certainly is extended. This is a 15% move here on the week, and Fifth Third is now entering a period of all-time highs. There are any number of smaller banks that are still trying to regain their prior peaks in price. And of course, you can certainly sort that list that we were just looking at. This is that scooter rating. So a lot of these stocks up here have already come out. CMA, so I only have 4 bank stocks and 3 of them are up here in the leadership position. So potentially, if you are on the prowl for stocks that are not quite as advanced in their move, you may want to just drill down a little bit in that scooter rating and get in front of these stocks that haven't had such explosive moves.
It's funny, I'm looking right now at Cooper, Mr. Cooper, which is kind of, let's see, right down there, a little bit further down under Key Corp. This was one that I had put in my Diamonds report back at the beginning of November. And, obviously it's doing pretty well, but it was, one of the things we pay attention to, especially I think with the banks is the stimulus. And, not that we've had stimulus over and over again to make historical comparisons, but the last time it came through, the banks really did see a surge. And so that's pretty much what I would be considering. I like also on this one, you can see that bear market, when it pulled down back there in March. And since then, it's really been, it's made a move. It's well above the price at its bear market low and at the high that it went into before the bear market.
The other concept or the other item that is really driving these bank stocks is the share buyback programs that are taking place. So in mid-December, the Federal Reserve came out and authorized these bigger banks to renew and reinitiate their share buyback programs. It was something the Fed held off on approving until they were able to see that these banks were very stable, that their accounting, their P&L statements were in order. And so Morgan Stanley, this is another big winner on our MEM Edge report, but I'm pointing it out because Morgan Stanley was among only a handful of very mega large cap banks were allowed to renew their share buyback program. Morgan Stanley was one of them. So this is that pop here that we got in late December on that news. So there's a lot of bullishness taking place within banks, not just stimulus related. So let's go ahead and we can take a look. Erin, I know there's an area near and dear to your heart that we can go ahead and take a quick look at.
Absolutely. So we did already look at some of those areas within the industrial sector just previously, but what I want to go into is something we talked about, gosh, when was it? December, November? And that was the stocks and ETFs that were most likely to succeed. And for me, I've been looking at the solar renewable energy area since July. I did want to pull up because I pulled my favorites of what we've had as diamonds in the past. And I'm going to show you a few of those. And I still think there are quite a few areas that we can consider even more. So you can see back here where that pink line is, that's where I recommended SunPower, which, full disclosure, I own and continue to own, and I'm very happy to be owning right now. And it's still making a run. The nice thing is it did have quite a pullback here, and it's coming off of that 20 on that bounce. And now you can see we're back to making new all-time highs with SunPower. I thought this one has really been doing a great job. So that was in September, on September 30th. On November 19th, I pulled out Sunrun. And the reason I did was because, again, this area has been doing so very well, but Sunrun had a huge pullback, of course, right after I bought it. So that wasn't so fun. But, we had this double bottom shaping up. And so I had recommended it back here. And of course, we did end up with another pullback, but it never activated our stop. And so we're still in this one, at least I am. I do own this one as well, and excellent moves on it. I just can't complain about the renewable energy space. And then the other one was on December 16th. I let Diamond subscribers know about TPI Composites, which had just formed this ascending triangle. So I thought that looked fabulous. And of course, we're doing quite well with that one. And finally, this is one I own, but I never actually put out there as a diamond. I did talk about it with my diamond subscribers. And this is the ETF. So if you're a little bit more uncomfortable with going on those solar stocks, specifically on their own, because you did see there was some volatility, the ETF for solar is also looking good. And I mean, the problem is, of course, and this is what we were thinking all the way up through here, right? That it had just gotten overextended and that we couldn't see any more highs. But as we've been talking about with the blue wave, this is one of those areas that is going to be given a lot of attention, meaning a lot of money. So it's going to certainly be an area where we're going to continue to see growth. And you can see we were seeing growth even before subsidies and that sort of thing. So I think it's a great area.
I can actually share a quick name here that we can take a quick look at, because for those of you that may not be familiar, Biden has on the table an almost $2 trillion climate plan as far as promoting clean energy, whether it's in transportation and elsewhere. And that's an awful lot of funding to help these companies. This is Plug Power, an alternative energy. PLUG is the ticker symbol. And we can see it's actually, I'm sharing with you the chart. What I wanted to share with you is the weekly chart. You can see it's been in a very confirmed uptrend. Any kind of pullbacks are being met with support at this upward trending 50-day simple moving average. We can quickly move over to the daily chart. The stock gapped up 28% today, and it's not, I know it. This I actually do own, but the point is, it's not it's today's gap up is not about Biden and his $2 trillion clean energy plan. It is because they signed an agreement with the Korean company organization to expect it to really improve their growth prospects. So what I wanted to point out to you is this concept: when a stock actually gaps up and in so doing breaks out of a base, and it does so on volume. This is very bullish behavior. You'll see this type of action primarily around earnings, but news such as for Plug today is also relevant. So when that stock gaps up and in turn breaks out of a base, very, very bullish. So from here, you will want to drill down. What I'm saying by bullish is more potential upside, and you can then drill down into perhaps an intraday chart. I know, Erin, with your trading room, you probably do a bit more of this as well, where you drill down to a shorter time frame so that you can really fine tune your entry or exit point. We can see that it certainly is overbought here, but you're going to want to try and capture these kinds of swings when the stock is coming out of or reversing a downtrend. And I use these 5 and 13 simple moving averages on these shorter term time frame charts, and also volume characteristics. So that's a look at how to play gaps up on volume that are also base breakouts.
Excellent. Yes, I totally agree with all of that. And all the one thing you just watch, of course, I use that 5-minute candlestick chart, and I'll tell you what, just timing an entry during the day can get you at least a 0.5%. So in my trading rooms, I definitely go over how you can use those 5-minute candlesticks to time your entries and exits simply with an RSI and a momentum indicator.
And when is your trading room, by the way?
I have a free one on Mondays. So if you just go to decisionpoint.com and sign up for our free newsletter, you will be able to sign up for that trading room that is free on Mondays. And I do a special one just for my Decision Point Diamond subscribers on Fridays. So lots of fun to be had in the trading rooms.
Very good. Okay. Well, check it out on Mondays.
Yeah, absolutely. And I'll get you in there eventually to come with me, right?
Yes, I will join you. We'll make a big announcement. But let's move on. We, of course, have our last segment where we scour the headlines globally for interesting and sometimes funny news. This week, our headline is for Yeah, That Happened, is all about a commercial that Tropicana put out, and it was very quickly squelched because of course, Tropicana is a major provider of orange juice, but they also had an advertisement with a refrigerator, showed a refrigerator opening, and next to the orange juice was champagne. And it was advertised as a way for parents to cope with child rearing during the pandemic. And I did find it, I chuckled, but at the same time, there certainly was a lot of uproar by those that are saying that is hardly something that should be promoted or advertised. And Tropicana very quickly pulled the commercial. It was rather tongue-in-cheek, but not very well received.
Not executed so well. I have to say, when I saw that, I told you, I was like, I wouldn't need anybody to suggest that to me. I already knew.
The benefits, certainly you would have to keep your eye out on when. I would suggest after the children went to bed.
Yes, that's probably the wise thing.
You bet. So let's take a look. Here's Pepsi. PEP is the ticker. They are, in fact, the manufacturer of Tropicana. And boy, what a okay, let's get to a daily chart so we have a little more perspective here, but it is equally very, oh my goodness. We can get to this, but Pepsi has been hit here of late. They've been seeing in the way of downgrades. A lot of their sales are brick and mortar, and apparently travel related when people are out and about and traveling. I was unsure where that connection came from, but we can see the RSI trending downward now is below that net neutral 50, where we had that MACD negative crossover, and the stock is now below that 50-day simple moving average. Certainly not as attractive as a lot of the other stocks that we've been taking a look at here. Erin, do you want to?
Just go right ahead.
Okay, sure.
I was just going to say, what does Coca-Cola look like? But it's having a difficult time too.
It is, and indeed, and they create, it's called Simply Orange Juice is their product. And we can see the stock was poised here to break out of this very nice base, but they've gotten over up to 3 downgrades, Wall Street related. They, in addition to the potential for sales going forward, Coke is also in a tax dispute with the IRS, and analysts think that it will not go in their favor. So we can see another broken stock below key support. RSI is negative. MACD poised to trade below that net neutral. And another name that we can take a quick look at here as an alternative to the champagne and orange juice, thought we'd take a look at Peloton, and that is the cycling stationary bike with the classes. And take a look. The stock looks really actually very compelling and interesting. Had a base breakout and pulled back. It's up about 6% today, and I would say a break above that 10-day will clearly show a renewed confirmed uptrend in Peloton. We're certainly going to continue to work from home and be at home for the near future, but also they are due to report their holiday sales over the next few weeks, and that's anticipated to be very, very strong. Your RSI and your MACD here in a very nice uptrend. So this might be the way to go instead of heading for your
absolutely perfect for the New Year's resolution too.
You bet. Okay, well, we are going to leave it at that. Thank you, everyone, for tuning in. We look forward to seeing you next week with Chartwise Women.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.